So these are the questions that we want to try to answer in today's presentation. So the first one is, could Tesla grow its earnings by 1,000% over the next 5 years? I think it'll be pretty easy actually for Tesla to surpass that kind of earnings growth, and I'll show why. The second question is, Elon on the last earnings conference call, mentioned that 2026 would be epic and that 27 and 28 would be ridiculous. And so I wanted to put some numbers to paper and see what that might mean. And then, of course, also, what about 2029? What might that look like? The little teaser there is Tesla is going to cement its place as a true AI compounder, just like NVIDIA has, and we'll put some numbers around that. And then the third question is, when will the accelerated growth show up in the quarterly results? And it could be sooner than you think. And the last one is, what is the PE ratio today on earnings, let's say 5 years out? Everybody focuses on the PE ratio for the trailing 12 months or even the forward-looking 12 months. I'm more interested in what I can buy a company for today based on what it could earn 5 years from now. What if I told you that the PE today could be less than 1? You could be buying Tesla at less than 1 times its earnings 5 years from now. Wouldn't that be a good deal if that was the case? And that may sound crazy, but bear with us. We'll show you how.
This video is one of the most important ones to watch if you're a Tesla investor or if you just want to know what's about to happen to Tesla stock. Tesla analyst Cern Basher has outdone himself, this time back with new information showing you which year and even to the quarter will Tesla's earnings start to make such a difference that it will force Tesla stock to rise. This happened to NVIDIA in late 2023 when it proved to the world it's become an AI company, not just a gaming one. For Tesla, its transition to a robotics AI company, as shown by real revenue, is sooner than many of us think. We've got some really good data to share today. Buckle up. Cern Basher is a chartered financial analyst who's currently running his own investment advisory firm called BrilliantAdvice, providing wealth management services. Welcome, Cern. Thank you for doing this work and appreciate you back again.
Hi, Herbert. Yeah, I think this is going to be a very interesting one. We're trying to answer some very important questions, and I think they're worth an attempt at answering.
Yeah, the big one, of course, is people say, why hasn't Tesla stock risen? And the answer, many say, well, it's because of earnings. You need to actually see earnings. That's what happened in NVIDIA, right? When the earnings started to really pile up per quarter, and then at that point, investors could not ignore it anymore. They had to continue raising stock price. When is that going to happen for Tesla? Exactly which month? You've got a unified analysis where you've looked at every single business unit and you've mailed the first time, I think you've done this by quarter, not just by year. So let's take a look at this.
That's right. Yeah. In the past, I've always taken a look at the growth opportunities for the different Tesla business lines, and we have put a model together that looks at it year by year. This is the first time I've built a quarterly model. And so Elon on the last earnings conference call, mentioned that 2026 would be epic and that 27 and 28 would be ridiculous. And so I wanted to put some numbers to paper and see what that might mean. And then, of course, also, what about 2029? What might that look like? So really a good look at the next 5 years.
Okay, let's start off with a audio clip directly from Elon, what he actually said on the fourth quarter earnings call, which was January this year. Let's listen into what he said.
I've said this before, and I'll stand by it. I see a path. I'm not saying it's an easy path, but I see a path to Tesla being the most valuable company in the world by far. Not even close. Like maybe several times more than. I mean, there is a path where Tesla is worth more than the next top 5 companies combined. There's a path to that. I mean, I think it's like it's like a difficult path, but it is an achievable path. So. And that is overwhelmingly due to autonomous vehicles and autonomous humanoid robots. So our focus is actually building towards that. And that's what we're laying the ground. We laid the groundwork for that in 2024. We'll continue to lay the groundwork for that in 2025. In fact, more than lay the groundwork, actually, so be building the structure. We're building the manufacturing lines, and I'd like setting up for what I think will be an epic 2026 and a ridiculous 27 and 28. Ridiculously good. That is my prediction. As yet, very few people understand the value of full self-driving and our ability to monetize the fleet. I've some of these things I've said for quite a long time, and I know people have said, well, Elon's the boy who cried wolf like several times, but I'm telling you, there's a damn wolf this time. And you can drive it. In fact, it can drive you. It's a self-driving wolf.
Okay. Epic 2026 is what he said. Ridiculous 27, 28. So if I listen to him, that's what I would expect somewhere in 2026, and you can maybe prove it based on your analysis.
Yeah, I'd like to put some numbers to what epic and ridiculous means, and I think I'd like to try to pinpoint when we might start to see those results, those epic results, start rolling in.
Okay, so that was a fantastic. Just listening to him. And by the way, he said monetize the fleet. I got to think about what he meant, other than, let's say, FSD revenue. So here is him also saying earlier this month, right? He said it'll require outstanding execution, but I think more like 1,000% gain for Tesla in 5 years is possible.
Yeah, and 1,000% sounds like a big number. It's 11x, and anytime you 11x something, that is a pretty good gain. But I think he's sandbagging here, and we'll show why.
Okay, Elon is sandbagging. I love it. Let's tell me what I'm looking at here.
So these are the questions that we want to try to answer in today's presentation. So the first one is just what we discussed. Could Tesla grow its earnings by 1,000% over the next 5 years? And as I mentioned, I think Elon's given us a low barrier here. I think it'll be pretty easy actually for Tesla to surpass that kind of earnings growth, and I'll show why. The second question is regarding the epic 26 and the ridiculous 27 and 28. What does that mean? Right? And the little teaser there is Tesla is going to cement its place as a true AI compounder, just like NVIDIA has, and we'll put some numbers around that. And then the third question is, when will the accelerated growth show up in the quarterly results? When actually will we start seeing that? And it could be sooner than you think. And the last one is, what is the PE ratio today on earnings, let's say 5 years out? Everybody focuses on the PE ratio for the trailing 12 months or even the forward-looking 12 months. I'm more interested in what I can buy a company for today based on what it could earn 5 years from now. And what if I told you that the PE today could be less than 1? You could be buying Tesla at less than 1 times its earnings 5 years from now. Wouldn't that be a good deal if that was the case? And that may sound crazy, but bear with us. We'll show you how.
This is great. These are the top 4 important questions I think that Tesla investors want to know, right? What is going to happen in 26, 27, 28? What is actually happening in quarterly results? Because as soon as you show that, then you can then map out the Tesla stock price. And then you've also said, if the things happen in 5 years, bring it back down to what a price is today. This is great. Okay.
Yeah. So to answer these questions, let's go back to a presentation that Jensen made. This was last year. And he's sort of showing the value chain of AI. And we're solidly in the Gen AI part of this curve that he's showing here. And we're moving towards the agentic AI. But on the far right side is what he's called physical AI, or what Elon calls real world AI. And that is going to be by far the biggest opportunity and probably where the most value is created. And that's exactly where Tesla is playing with the Robotaxi fleet and humanoid robots. Okay. But first of all, let's explore the journey that NVIDIA has taken. NVIDIA really is the first AI compounder. And just to walk back in time a little bit, in 4 years ago, at the fourth quarter of 2019, NVIDIA was doing 3.1 billion in revenue in the little table there in green and white. The gaming division was producing about 1.5 billion of revenue. The data center division was almost at $1 billion. Fast forward to the last quarter, and I'm calling it Q4 of 2024. It's the quarter that ended actually this January. They're kind of 1 month off on their quarters. This is the most recent data set for NVIDIA. For them, it was their fiscal 25 quarter, but it's their calendar 2024 quarter. So it's a little confusing with NVIDIA's numbers, but this is the most recent quarter. The total revenue of the company has 12.7x from 5 years ago, the quarterly revenue. It's gone from 3.1 billion to 39.3 billion. Okay. The gaming division, its quarterly revenues have gone up from 1.5 billion to 2.5 billion. So decent. But look at the data center. It's gone from 1 billion now to 35.5. It's about 36x in 5 years. This is what's possible for AI compounding type businesses. NVIDIA is showing the way. And by the way, Tesla is riding the exact same wave that NVIDIA is on. Tesla's just on a different part of the wave right now. They're in the early part where NVIDIA is solidly on the wave. Okay. So the next page shows what happened to NVIDIA's margins. NVIDIA always had pretty good gross margins, 60, 50, 60%. It took a dip after sort of their strength during the COVID years in 2022. The margins took a dip. The gaming revenues came off, and that was the trough in their margins. And since then, with their AI business, the margins have even gone to a newer, higher level. Gross margins above 70, and net margins now well above 50%. Again, this is what's possible for an AI compounder, a step change in the level of margins. Okay. And then on an operating income basis on the next chart, NVIDIA, on the strength of almost 13 times earnings growth, they've increased their operating income by 24 times over the last 5 years. Phenomenal growth in earnings. They're doing almost $25 billion a quarter in operating income. Almost $100 billion a year in operating income. Okay. Now, what does that mean for the stock price? Well, as you can imagine, you increase earnings that much, the stock's going to follow. And the market cap 5 years ago was $165 billion. Pretty sizable company by any standards. And at the end of the quarter, when they reported, it was 3.2 trillion 5 years later. 19.3x gain in the market cap of the company. So again, this is what is possible for companies that successfully ride the AI wave. Okay. Now, the interesting thing is, what did you pay for the stock? If you bought it 5 years ago when the company had a market value of 165 billion, what was the effective PE on that? Right? And I call that hindsight PE. And if you go to the next page, here it is here, you can see that the hindsight PE for NVIDIA was about 2 5 years ago. You could have got it for about 1 a few quarters before that. So maybe 5.5, 6 years ago, you could have bought NVIDIA for about 1 times its last quarter's earnings on an annualized basis. That would have been a pretty good investment, right? If you had the foresight to invest in a company that would have 24x its operating income over a 5-year period. Now, NVIDIA's PE back then was not 2. What I'm saying is the hindsight PE. In hindsight, based on what we know now and how much NVIDIA is earning, its PE effectively was 2 back then. No one knew it, but that's what it was. So what I'm trying to say here is that if we apply the lessons of NVIDIA and project forward for a company like Tesla, let's see where their business could be 5 years from now and see effectively then what the hindsight PE might be today for where Tesla's business is going to be 5 years from now. So we'll get to that in a minute. Let's build it up from the ground first. But before we go there, the other thing I want to share with NVIDIA is share repurchases. They have bought back $67 billion of stock in the last 5 years. Okay, so just keep that number in the back of your mind. The other thing on the next page shows their cash balance is now $43 billion. It would be even higher than this, but they've invested $8 billion in CapEx over the 5-year period, $22 billion increase in accounts receivable. That's money that'll eventually come to them. But as their business is growing, it takes a little while to get paid, and another $9 billion in inventory. So they've plowed a lot of money into the business to grow it. they've bought back a lot of stock, and their cash has still grown from 10 billion to 43 billion. This is the same problem that Tesla is going to have 5 years from now. They are going to be able to grow their business, buy back a ton of stock if they want to, and still increase their cash position. And I'll put some numbers to that and what it might look like 5 years from now.
I'm very excited to see Tesla's numbers. A question for you though, Cern. So, okay, so you're going to show us what's going to happen to Tesla. NVIDIA's changed from a gaming GPU chip company to a GPU chip company, but it still really was a hardware. I know they sell CUDA. I know that they have a software. They have AI, other kinds of software, but they're still primarily a hardware company. And yet they were able to get their margins to go to 70%, like just skyrocket the margin. And therefore earnings, actual dollars came in, profit went up. Now, Tesla is a hardware company selling cars at, I don't know, 17, call it 18, 20% margin because it's a car company. But now when you switch to these other businesses, they're primarily a software company.
That's right.
So the margins to me should be much higher for Tesla than it might have been for 70%. You can't argue with 70, 80% margins but it's just a hardware company still. NVIDIA versus Tesla is really going to become a software AI company.
There's a really nice opportunity for Tesla to materially increase its margins. And again, we'll discuss that today as well. And I'll show you what that looks like for the business. Yeah. So in order to make some projections for Tesla, we need to put some inputs in the model. We need to make some assumptions. I've got two tables of assumptions. This is the first table for Tesla's existing set of businesses, the autos, the columns with the red line, the energy business, the columns with the green line, the services and other business, which is supercharging, used car sales, insurance, and maintenance charges, vehicle repair and so on. That's the yellow line. And then the regulatory credits is kind of a fourth business. So we need to make some assumptions about these four lines of business. For autos, I've got delivery numbers mapped out by quarter. Now, I realize that estimates here are all over the place. So let's call this model my base case.
Mhm.
And maybe it's easier to drop down towards the bottom where I summarize each of these by year. So I've got 1.8 million deliveries for 2025, which is basically no growth over 2024.
Mhm.
And then growing to 2.1, 2.8, 3.8, and 5 million deliveries in 2029. Now, this would include the production of cybercabs. It would include the production of semi, although that would be small in terms of numbers, but a big impact in terms of revenue. And so I do have, ASPs for auto coming down from 40,000 per vehicle down to 30 over 5 years. Could be more, could be less. And I do have margins for auto improving from 15%. This is gross margin, 15% up to 20%. So I recognize that people could take issue with all these numbers. And the model is designed so that we can plug in different sets of numbers. And over time, we can put in different assumptions from different folks and see how the model, what those results are. But these are the numbers that I have so far. On the energy side, I've got the megawatt hours deployed, effectively gigawatt hours deployed for 2025 at 75 gigawatt hours. Now, last year, I think it was 37 and change. So that's a pretty healthy jump for 2025, and then growing to 120 gigawatt hours, 180, 300, and 500. And then likewise here too, there's a declining average selling price for each kilowatt hour from 260 down to about 200. It's entirely possible in my mind that the selling price goes down even further than this, but I think it would probably be made up with extra amount of megawatt hours deployed. So those two perhaps can offset each other if one is higher or lower than the other. I've got margins on energy going from 25% up to 29%. And that's reflecting over time increased auto bidder revenue, which is the AI-powered software optimization tool that they use on Megapacks. So that's what's driving that higher. The services and other business, just to touch on briefly, I model that out just simply as a percent of auto revenue. So growing from about 16% up to 21% of the auto revenue. And that's a reflection of a larger aging fleet, needs more maintenance, also more utilization perhaps on the supercharger network, particularly from other automakers. And also, by the way, too, if you do have a robotaxi network, there's probably more supercharger use being used there, particularly if individuals are putting their own cars in. They may need charging during the day, so there might be increased revenue there. My margin assumptions on services and other are pretty modest, from 6.5% up to 8.8 by 2029. And then finally, regulatory credits. I don't think they're going away. This isn't a huge part of the business, but basically 2.8 billion in 2025, going up to about 4 billion in 2029.
Mm-hmm.
Okay, so just to visually then show what these numbers look like, and we'll just flip through this series of slides pretty quickly. For auto deliveries on the next page, you can see it's a 1% growth from last year. So expectations aren't particularly high here in terms of more deliveries for 2025. And then 17% growth for next year, and then 33, 36, and 32 for the next 3 years. So it's a 2.8x in the number of deliveries for autos, is what I've baked into the model. And then the auto revenue is about a 2x increase over a 5-year period. Again, I don't think this is crazy.
Mm-hmm.
And gross profit is about 2.4x. Okay. So that's autos. And then energy, it's a 16x increase in deployments. We expect the energy business will grow quite dramatically. But revenue is only about a 10x. And that's because the average price of a megapack is expected to come down over time. Offset perhaps a little bit by more AI revenue. And then finally, gross profit about 11x over the 5-year period. So you can see that the profit growth from Tesla Energy is actually a real nice profit driver in the near term, an 85% increase in 2025. Whereas the auto business, I'm not expecting a whole lot of profit growth, actually negative 3% in 2025. So autos is a drag on growth this year, whereas energy is a big plus. Okay. And then services and other, a 3x increase in revenue over the 5-year period. 4.5x increase in gross profit. So a meaningful contributor, but at relatively low margin. But still, it's contributing to the growth. Okay. And I didn't show the chart for the regulatory credits. Those are pretty straightforward. Okay, so now let's turn to the two new businesses, the AI-powered businesses of Robotaxi in blue and Optimus in yellow, the yellow section. Robotaxi is going to be made up of two components. One is company-owned, let's call them cybercabs. They may also be other company-owned vehicles. They could be any of the Tesla vehicles, could be company deployed. And then the existing EVs, the existing fleet of individually owned EVs could also be deployed in the Robotaxi network. So I've built up assumptions for both. And then you can see the Robotaxi annual revenue starting at $50,000 per vehicle per year. Now, Ron Barron was quoted this week of robotaxis earning perhaps between 30 to 50,000 in profit per year. So I just want to, remind folks, in my model here, I've got 50,000 in revenue, not profit.
Mm-hmm.
And then my margin assumption starting low and then building up to about 70%. Now, I would also say that my revenue numbers here for Robotaxi is basically just passenger fare only. It does not include delivery service revenue. It does not include much in the way of advertising revenue, entertainment and connectivity, curated experiences, or distributed inference. So actually, I think there's a lot of upside in the annual revenue per vehicle that's not in this model. I think these numbers are actually pretty conservative.
And that's what Elon meant when he said that there's a lot of ways we can monetize the fleet.
That's right. That's right. So that's the set of Robotaxi key assumptions. On the right side of the page, Optimus, I've got deployments of 5,000 in the fourth quarter of this year. Now, granted, those may be internal. Fine. And then next year, building up 10,000, per quarter. If you look at the annual numbers, it's 5,000 for this year, it's 100,000 for next year, then 1 million, 3 million, then 7 million in 2029. Now, I like to think of these in auto equivalents. So let's say you could make 10 robots for every vehicle, then 7 million robots is like making 70,000 vehicles.
Yeah.
Sorry, 700,000 vehicles.
Yep.
Right. Not a stretch for a company like Tesla 5 years from now. Now, my Optimus revenue per bot numbers, I actually have increasing over this period. Starting at, let's say, 75,000 per year per bot, and then going to 90, 100, 110, 120. And the reason is as the bots become more capable, they become way more valuable. They can do more higher paid jobs, so to speak. Now, I do think longer term that the revenue per bot will come down because of competition. But in this time period, where there's only 10 plus million bots that have been produced by Tesla, I don't think pricing is an issue at all. And then I've got the margin building up to 75% over the course of this 5-year period. Okay, so let's take a look then at how these businesses look in terms of the growth. If we go back to the Cybercab here, this is annual deployments, starting off pretty slow at 22,000 in 2025, and then growing next year by a healthy amount. Didn't put the percentage in there because it's a large number. And then going to 2 million, that's a 340% gain in deployments. And on out to 2029, you're at 5 million a year being deployed at that point. Okay. For revenue, you get out to, by 2029, 406 billion in revenue. Right. So very healthy growth over this 5-year period from a revenue perspective. And then gross profit, you're looking at 280 some billion in gross profit by 2029. Okay, just based on the assumptions. And then Optimus deployments, here's the chart for that, starting off very low. Again, 5,000 this year is like making 500 cars or less. Right, depending on if it's a 10 for 1. It may even be a 20 for 1 different production. In that case, it's like making 250 vehicles. It's nothing. It's a drop in the bucket for Tesla. And you can see then the growth there, 100,000 to 1 million, 3 million to 7 million. And then from a revenue perspective, by 2029, just on these few bots that they're producing, you're almost at $1 trillion in revenue. Right, that's the staggering size of making, just 10 million or so bots. You're almost at $1 trillion in revenue at that point.
And right now we have 100 billion, right? Annual revenue for Tesla this last 2024. That's going to be 10x in revenue just in 5 years. Yep.
And the gross profit on that is like $700 billion on the next page.
That's the one.
Right. And again, in 2029, we're just getting started. If I included 2030 and beyond, it's even bigger than this potentially. Although at some point, pricing pressures may start to kick in. Okay. All right. Bringing it all together. On this page, this is the total revenue from 2024 of about 100 billion. We're looking at a 16 to 17x gain in revenue over the next 5 years. Right. So maybe a 10% growth in revenue this year, a 37% growth in revenue in 2026. That's pretty healthy. 100% growth plus in 2027, 150% growth on top of that in 2028, and then a mere 114% in 2029. You start to see why Elon was using the words epic and ridiculous to describe what may be coming. Now, this is revenue. So let's take now a look at just visually the components of this on the next slide. The yellow arrow is the quarter that was most recently reported, Q4 of last year. So you can start to see visually the transformation that's about to occur for Tesla in the next 5 years. And the red arrow just points to the fourth quarter of 2029. The yellow is bots. The blue is Robotaxi. The other businesses that we worry about so much today about auto sales and energy deployments do not matter by 2029. They don't even matter in 2028. They only matter this year and maybe a little bit for next year. Okay. And maybe a little bit in 2027, we're still worried about auto deliveries. But beyond that, no one's going to focus on that ever again. Okay, so focus on auto deliveries for the next 2.5 years. And enjoy that because that's it. Right? Okay. Let's look at it now as a percentage of revenue. Again, this will make it even clearer. On this chart, the red is autos, and you can see it, the decline in importance happens pretty quickly.
Wow. Yeah.
Okay.
Whoa.
In terms of revenue, by the time it gets to 50% of revenue, you're looking at, maybe third or fourth quarter of 26.
Okay.
Okay. And by then, energy is growing nicely, but you're starting to see the rapid growth of Robotaxi in blue and the early growth of Optimus in yellow. And those two have the potential of growing so rapidly, they push down autos as a percent of revenue to maybe 10% by 2029.
It's crazy.
Right. So visually, this paints a nice picture. Again, this is revenue. It's probably even better to look at in terms of profit. So let's take a look at that.
Well, I don't want to leave this chart quite yet. I mean, 50% of revenue by, what are we looking at here? Second or third quarter, let's say the end of 26. So the end of 26, 50% of revenue. At some point, what percentage of revenue, when you have it, are you no longer that car company? And some people will say, we're still at 90%, so we're still a car company. 50%, you can't do that anymore. And then you already have actual revenue coming in from all these other businesses. And so then people will need to start to model it out, bring it back in already. So even by the end of the 26, at that point, it should be fairly obvious to everyone.
Yeah.
At that point. Well, you'll tell me the exact quarter, but that's quick.
No, we're getting to that.
Okay.
So now in terms of gross profit, so recall we had a 16, 17x in revenue. We're looking at a 60x in gross profit. And by 2029, well, let's work forward. From 2025, we're looking at maybe a 12% increase in gross profit this year. Okay, that's fine. But, for a company trading at a PE over 100, not so exciting. 2026, 87%, that's pretty epic. In 27, 244% growth, 244% growth in 2028. Those are pretty ridiculous.
Mm-hmm.
And then a mere 144% in 2029 for $1 trillion in gross profit.
Yeah.
60x gain in gross profit over the next 5 years. So again, visually, just like we did with revenue, you can see that from a gross profit perspective, because Robotaxi and Optimus are more profitable, it pushes down the existing, on the next page, Herbert, it pushes down the existing business lines even more. You can barely see the red and the green, autos and the energy, by the time you get out to 2028, 2029.
If 26 is epic, you can see it here. Epic is almost like 100% growth, 90% growth. Then you got ridiculous 27 and 28. That's what he meant.
Yeah.
But if 26 and 27, 28 are ridiculous, I wonder what you would call 29.
And not to mention 30 and 31, 32 as Optimus really, really takes off in those years.
It's really exploding at that point. And we're talking the large numbers exploding.
That's right. At some point, Robotaxi won't even matter. But initially, it's a nice change. It's a welcome change. Yeah. And then finally, on this gross profit chart, this is the percent of total. Autos drops off even more quickly. It's at about 50%, it looks like, in maybe mid 2026 of gross profit. Yeah. As Robotaxi is really starting to accelerate in terms of generating gross profit for the company. And Optimus
So
is just
that's
starting.
interesting because now the profit is mid 50%, mid 26, whereas we looked at the revenue was late 26.
Yeah.
Yeah. It's just crazy.
Because Robotaxi and Optimus are more profitable, the profit impact will be felt more so than the revenue impact will be.
But wait, mid 26 is next year.
Yeah.
Are you reading the right numbers here?
This is coming. It's coming fast. Sooner than you think, as we teased on that one slide. Yeah.
Wow.
Okay. All right. Net income. 100x gain in net income. That's not 1,000%, Herbert. That's over 10,000%.
Yeah.
Okay, almost 10,000%. Okay. So when I said Elon was sandbagging when he said 100% gain, I think he was really sandbagging. Maybe he forgot a zero. Right. Phenomenal potential in terms of the impact to the company's net income. And again, this is including a healthy amount of CapEx. I mean, I built a full model here. I think these numbers, again, all based on the assumptions, but these numbers are perfectly achievable given those assumptions.
Yeah, I mean, I was following very closely every single segment: auto, energy, auto, robotaxi, and robots. And I thought you were very conservative. Like you were holding yourself back.
Well, as you know, I try to be conservative because these numbers are so ridiculous. You don't need to be anything but conservative.
Yeah.
Right.
Like the numbers you were showing about how many cars or how many bots, they were very. It just did not strike me as beyond what everybody else was saying. Like it's actually much less than what everybody says. A lot of other robot companies are saying.
Yeah. So look at the net income growth here in 2026, 150% gain. That's going to get Wall Street's attention.
Yeah.
And then the next 2 years, the ridiculous years, as Elon puts it, 27 and 28, 300 and high 200% gain in net income.
Yeah. So the growth in net income is almost double what we were looking at in revenue, and we thought revenue was big. This is what's really going to show, and that's really the story, right? It's margin. Marsha. It's margin. That's the story. That's going to blow everybody away, and that's what I think that even when you compare to NVIDIA, it's really it's really that this is going to be, if not equal to what NVIDIA did, it could actually surprise us and be bigger than NVIDIA because it's really larger margin.
It's bigger than NVIDIA's opportunity, I believe. It's bigger.
Of what NVIDIA has already done in the last 2 years. Mm-hmm.
Oh, for sure. But even beyond that, Tesla will catch up and surpass NVIDIA at some point. Yeah.
I just want to match what NVIDIA stock did in the last 2 years. That's all we need to do.
Well, we'll talk about that in a little bit here in a second.
Okay.
But yes, so the potential here, again, if we trust the assumptions, if we believe in those assumptions, then this is what the math works out to in terms of net income for the next 5 years. So this year, maybe about the same as last year, nothing special. And you could argue that investors will be disappointed all year because, there's no growth.
Mm-hmm.
Maybe, again, hold that thought. I'll show you maybe a reason why that may not be the case. But certainly 26, that's going to get everybody's attention. And then 27 and 28, people are going to be freaking out about this growth if that materializes in this way. Okay. So again, visually, and just putting Elon's latest message up there about 1,000% gain, he forgot a zero. I'll forgive him. It was a typo.
Mm-hmm.
Right. That's the magnitude of what we're potentially looking at for how Tesla becomes an AI compounder. It's the growth in units of Robotaxi and Optimus in combination with the extra profitability that those two business models bring than just selling vehicles at low margin. It's the compounded effect of both of those changes. That's what allows this kind of growth. And again, I think using pretty conservative assumptions for everything we've done so far. Okay. Let's take a look at the next page and look at how the gross margins change. We looked at this for NVIDIA. And for a Tesla, it's a more meaningful impact. If you recall, NVIDIA's gross margins were already above 50%. In
Right.
Tesla's case, they're less than 20.
That's my point. Yeah.
But I think they'll go above 60 at some point. And then the net profit margin,
Yeah.
approaching 50%. The green line. Yep. And it'll happen, kind of smoothly and gradually each quarter as the Robotaxi and Optimus kick in, because the extra profits there will just bump up the overall profitability of the company. Now, of course, there'll be some lumps. It won't be the smooth line that I've graphed here. There'll be some bumps along the way, but generally that's the direction that we're headed. Okay. And then taking a look at the different business lines, again, just to emphasize the point.
This is a great chart. Okay.
Right. We've got autos in blue.
Yeah.
And I think auto margins are going to recover a little bit and then just stay flat. That's the dark blue line. We've got energy, which are already higher than auto. I've got them, coming down a bit and then gradually rising a little bit up to about 25%.
I mean, 30% was the
30%.
guidance. 30% was the guidance that Tesla gave in about energy profit. So this is fair.
Yeah. And again, that would include the AutoBidder software revenue, which should be pretty high margin. So that may be low. And then services and other in red. It's a fairly low margin business. We know they're not running that to maximize profit right now, but I think eventually the margins will grow a little bit, and you can see the modest growth I have there. But the two businesses then that really contribute to the margin growth are Robotaxi in light blue and Optimus in yellow. And of course, those two can't even compete against the red credit profit margin, which I have here at about 99%. Yeah,
sure.
That's the best business they have going, but there's a limit on how big that business can be.
Yeah. It's margins. Yeah. Okay.
So that's a pretty nice diversified portfolio of profit margin potential for Tesla, with the two biggest potential businesses also having the two highest margin.
That's the point, isn't it?
Yeah.
That's the point right there. It's like the two biggest markets that Tesla's now about to enter are also happens to be the two biggest margins, and it's yearly. You're going away from this one-time vehicle hardware sale, making $5,000 to $7,000 per vehicle one time, and you're done. Now moving to this every single year, either Robotaxi you're making $30,000 or $50,000 per year, or robots you're making $50,000, $100,000 per year, every year.
Yeah. It's a recurring, high margin, high growth business. Wall Street loves that kind of business.
I was talking to Larry Goldberg yesterday, and we talked about Apple and iPhones and whether or not Robotaxi is Tesla's iPhone moment. And then, but my wife was saying to me, well, iPhone, of course, it's like billions of phones. Every single human needed to get one. And then they switched to services and the monthly subscription of Apple Music, Apple TV, the App Stores. But what about, I like to compare that to, let's say, Robotaxi. Like how much, how different are they as a business? Is it equal to the iPhone massive market, like Tesla's, Apple, what ended up happening to them, becoming $3-4 trillion market cap because what they did with it? Or is it like a small compared to the iPhone, the cellular phone market,
How much do you spend a year on your phone and related services?
So a lot more now than I did 2 years ago, right? So before
Yeah.
I would buy a phone, $1,000.
Yep.
Let's give them 60, 70% margin there. Let's say they got $700. I don't know what it is. And then obviously started now, they sucked me in, right? So now I am paying $30, $40 a month now. I have to for the storage, for the music. I ended up, I got sucked in. Initially, I was so denying. I don't want to buy Apple Music. I don't want to do these things. Now I jumped up to the $50 a month. So that's $500 a year. That's equivalent to per year now. So yeah.
So let's say you're spending $1,000 a year with Apple.
Yeah.
Your transportation costs are way higher than that.
Mhm.
Not to mention, food delivery and all the other services that can be layered on top of a Robotaxi network. So
Mhm.
the market opportunity for Tesla is much bigger than what Apple is enjoying right now.
The question is whether or not like every human needs a phone, whether or not every human needs Robotaxi or
Every human needs
bot.
transportation. Now, whether it'll be served with Robotaxi in all countries of the world, that remains to be seen.
Right.
But it's a big enough market, certainly in the Western world. Yeah, it's enormous. Yeah.
Sorry about the distraction here. Okay.
Yep. So let's take a look now at two or three other different scenarios for the model. So that we just went through the base case. 16, 17x revenue growth, 60x gross profit growth, and 100x net income growth. And by the way, if you apply a PE of 50 to that in 2029 to Q4's earnings, you annualize those earnings, you get a $48 trillion market cap on this base case.
By 2029?
Yep.
So
now we'll go into a bit more
case,
detail on that in a second.
Yeah. You're saying base
yep.
case, let's say $50 trillion market cap.
Yep.
We are flirting around the $1 trillion mark. We're actually below
now,
that
let's
right
say
now.
you don't want to use a PE of 50. Let's say it's 30, then call it a $30 trillion market cap.
Yeah, this is
whatever
where
PE you're comfortable assigning. I maintain it should be at least 50 because the growth is well above 50% and the margins are huge. I think at that point, the PE is still very high.
I guess it depends on the robot market and the competitors and how much the people are estimating the TAM for it, and then how much, like you said, margins plus per year, depending on competition at that point. Yeah.
Yeah. Now, let's assume in the second line that there's a 1-year delay on the rollout of Robotaxi and Optimus. So take the numbers that I had for those two and push them down the chart by 4 quarters. Now you only get 8.5% revenue growth, at 26x gross profit growth, a 41x net profit growth, and you get a market cap of 21 trillion. Okay, so a delay does matter, but again, you're just pushing it down a year. So if you just wait till 2030, you're up to probably a market cap now of the 48 trillion by that point. Right. So if your timeline is only 5 years, then yeah, this matters. If your timeline is longer than 5 years, then who cares? Right. To go from where we are today, $800 billion company, to 21 trillion or 50 trillion, it's not going to matter. Now, the next one I want to show you, if Optimus is 0, if Optimus doesn't work, it's a failed project, they can't make it work, no one can get these robots to do anything, no one's going to buy them, then you can see it's a 7x revenue growth and a 32x net profit growth. And it still yields a market value of about 14 trillion on the back of Robotaxi.
Yeah. So it's still a 10x of a company,
Yeah, just with Robotaxi. And again, only with passenger revenue, not including all the other revenue sources that platform could offer. So I think that's very conservative. But without Optimus, it's a nice upside. But I wanted to show here how important Optimus is to Tesla's 2029 valuation. Now, so far we've been cutting back. Let's accelerate the Optimus ramp. Okay. And Optimus ramps faster. And I haven't shown the numbers here just in the interest of time, but you can see now that accelerates the revenue growth and net profit growth, and the market cap gets pulled forward. Okay. So These estimates obviously are wide enough to drive a bus through, and of course they should be, because we're talking about some big numbers, some big growth over a 5-year period of time. But I think it should at least give folks some understanding of what we're talking about here in terms of the potential for Tesla. Right? Um, it's really quite phenomenal. All right. Now, let's talk about valuation a little bit. The company today is trading at something like, call it 125 times this year's earnings, depending on what your estimate is. Now, the reason that it's trading at that multiple is because people expect that Tesla is going to produce attractive growth in the future. That's the only reason you would pay that much for Tesla today. And a lot of people spend all kinds of time arguing that, oh, that's too much. It should only be, 70, or it should only be 50, or whatever number they want to pick. But if you're looking out at what Tesla's earnings power is over 5 years, and then saying, at that point, I think Tesla's going to trade for a PE of like 50, then you would expect the 125 today to step down over time in order to get to the 50. Right. So I do expect that Tesla's valuation will step down from where it is now to a more reasonable number at the end of 2029. Now, if you do that, then you end up with this projection of the market cap over time. So today, as we stand today, I believe that Tesla's market cap is around 800 billion. Right. And if I apply those PEs that we just showed on the previous page to the earnings numbers that the model produces each quarter, then here is the expected market cap of Tesla over time, over each quarter for the next 5 years. Now, this excludes the fact that Wall Street typically would be forward-looking. If they suddenly expect that 2026 is going to be epic, the PE multiple actually may go up now to adjust for that. So this does not include that. So if you're just looking at this and you say, okay, we're at 800 now, and a year from now, this model is saying we're going to be at 1.8 trillion. That's helpful. That's based on earnings and the step down in PE that I had in the previous chart. Okay. Now, I wouldn't say that these are any kind of price targets for Tesla, but at least I think it gives you some idea of how the valuation may step up over time. And you can see there's an inflection point here, right, in 2027, where you really start to get an acceleration.
It's crazy.
In the valuation based on earnings.
We might double by next year, but then these are going to be tiny numbers by 2 years from now, 27, 28. Yeah. You'll 10x by 27.
Yeah. Now, so that's all great, right? You can see some projections here for some crazy market values, 48 trillion and, by Q4 2029. That remains to be seen. We don't know for sure, but again, if this is your expectation for profits, then to me, it's entirely reasonable that we get to a valuation like that at that point in time. Now, a lot of people say, well, there isn't enough, today's market cap of the S&P is not even close to that, or whatever the answer is, right? The largest company today is 3 trillion. That is not any kind of limiting factor. Years ago, we used to think of a, $100 billion company as being incredibly massive. And today that's not that big. So the fact that this number is so high is really there's no limiting factor around that. If the company is producing that kind of earnings power, then you could easily justify this kind of valuation. Okay. Now, let's go back to this concept of hindsight PE. Forget the fact that the company might trade at 48 trillion in 2029. Forget that for a second. Let's just focus on earnings. If we believe that in Q4 of 2029 that the annualized earnings of Tesla approach $1 trillion, and that's the output from the model, how much are we paying today for that earnings? It's less than 1.
Mm.
If today's market value is 800 billion and the company has earnings power in 5 years of close to $1 trillion,
Mhm.
you're paying less than 1 times earnings for that. And again, I'm calling this hindsight PE because if we're fast forwarding 5 years in time and we see Tesla making $1 trillion, then today we're paying less than one times for that. In this case, it's kind of more of a foresight PE than hindsight, but the concept's the same.
Yeah. It's almost
Wouldn't
like
that be a good deal,
it's a
Herbert,
great
if you
deal.
could buy a company for less than 1 times earnings?
No, this is where I think people are very tripped up all the time. You look at the stock price today, you go 125 P, that's very expensive. That's crazy. You're expecting so much out of that. It's risky. But you could have said, I think you already said it, right? You can go back to other companies where it was crazy, like Amazon,
Yeah.
Apple, NVIDIA.
NVIDIA.
You can give all these examples where you got these crazy PEs. And then, of course, hindsight later, it turned out that they were, like you said, a 1 at the time because they didn't just grow, they grew faster and more and bigger and higher margin than anybody ever expected. In fact, they should have been given more than 125p at that time, like whatever, hundreds
right.
of p. Yeah. It was so cheap at the time, and yet everybody thought it was so expensive.
Yeah.
And it's a bet. That's part of the risk. But it turned out for these companies that the truth came and it happened.
It does on the surface of it seem crazy today to assign such a high PE to such a low margin company. But that's not what Tesla's likely to be 5 years from now.
Yeah.
And therefore, based on, what I'm calling hindsight PE, you may well be picking up Tesla shares today for less than 1 times earnings.
Yeah. And what I've been saying recently is that every single month that goes by, you're actually you're increasing the probability that physical AI is coming. You're watching Robotaxi improve. You're watching robots being built. Now you're seeing, every month that goes by, you're increasing the probability that's going to happen as opposed to the opposite. So
we recently saw a video from Google DeepMind working with Apptronic, verbally giving robots instructions, right? And the robot's doing work. The person messing with the robot and moving the container that the robot was asked to put the items into, and the robot handling that no problem. So the capabilities will be there. There's absolutely no doubt about that. Now it's just a computing problem.
Yeah.
It's just going to take time to solve. Yeah. So let's now think about stock buybacks. If you have a company with this kind of earnings power, then you have cash to start buying back stock. And my prediction, based on the results of this model, is that in Q1 of 2026, Tesla starts a stock buyback program.
Oh my gosh, sir, that's like less than a year away from now.
Yeah.
1 year from now, you believe that Tesla will have to do stock buybacks?
They don't have to, but they can.
They can. Okay, there you go. Because
and it might be
they
a
need to
couple
spend
billion
this on.
dollars.
They need to spend this on data warehouse. They need to spend it on robot building, on all that. But you've accounted for all that, right?
Yeah, I have. I've got a healthy CapEx budget. I didn't include the chart in this deck, but it's a healthy amount of CapEx. And so I think around this time, once you start turning on the spigot of recurring high margin revenue, it gives you a lot of confidence in your business. You don't have to reserve maybe as much cash. And these are nice cash flow businesses, right? If you can produce a car for 20,000 and every year it makes revenue of 30, 40, 50, you do that as much as possible. But
How much cash would Tesla have by next year? By the time
we'll see that on the next chart. And before we get there, this 5-year projection has Tesla buying back $500 billion of their own stock.
Yes. Yep. So
okay,
not worried.
And again, NVIDIA has purchased in the last 5 years 67 billion of their stock. Yeah. Okay. Now on the next page, this shows the remaining cash balance after accounting for the stock buybacks. So if they're at 38, or if they were at 36 billion at the end of the year last year, you can see 38 Q1, 40, 43, 46. And then by Q1 of 2026, after that $2 billion cash buyback, they still have 49 billion in cash.
There you go.
And that's factoring in CapEx and everything else.
The
cash balance after $500 billion of buybacks, still grows to 700 billion over this time period.
So this includes your buybacks, right? Because I'm
It
trying to
does.
find
It's
out
after the
when
buybacks.
if you did not do buybacks, when does the cash balance hit 100 billion? So it's going to be
Well, you'd have to
before
back out those
Q4,
numbers. It might be
16. So it
middle.
looks like
It might be
16. So
middle of 2027.
16 plus 11 plus 8 and all that.
Yeah.
The reason why I'm saying that is because I think Apple did not do their buybacks until they had over 100 billion of cash
Yeah.
in the bank. So it could
Now,
be that,
NVIDIA is not. NVIDIA started their buyback much earlier.
Hmm.
So I think it depends on the nature of the business and, of course, the folks running it and what they see coming and what the CapEx needs are. But Tesla, once these high margin recurring revenue businesses start to kick in, a buyback becomes much more palatable because
Mhm.
they've got revenue they can count on every quarter. They suddenly don't have to worry about what auto demand is going to be or when the revenue from megapacks are realized, as those businesses now won't really matter. They'll be able to track the revenue daily for Robotaxi,
Exactly.
right? Minute by minute if they want to. I mean,
Mm,
they'll know real time how that business is doing. And they will
yeah.
have to do that to optimize the pricing, by the way. And then with with Optimus, every robot deployed, they know exactly what the revenue is going to be. It's a dream as far as CFO is concerned. Yeah,
Yeah. They probably will also sign multi-year contracts with the companies, their customers. So you can
yeah,
lock in and say for sure already for the next 3 years. I used to work for a business that had these 3 years, 5 year, 7 year, pre-signed contracts. And so even if the company went down today, the company
yeah.
will still be in existence for 7 years because you've got all these
Right.
contracts that are paying you.
Yeah.
Yeah.
Okay, so that's exciting. Now let's try to answer the question of when
Mm.
the stock might respond. And this is tricky because you're trying to get in investors' heads. One way to do it is to say, okay, when is the earnings going to show up as year-over-year growth?
Mm.
Well, if you look at that, then you're looking at Q1 of 2026 for year-over-year growth. That's anything exciting. It jumps up to over 100% in Q1 of 2026. So you say, okay, 2025, based on that's a throwaway year.
Mhm.
And I would say, don't be so sure. Let's go to the next slide. This is now looking at quarter over quarter. Q1 on here, the first blue bar, looks kind of rough. Quarter over quarter is going to be down and down big, potentially. Okay. Look at Q2. Of course, now we have an easy comparison. We've got a low
Mhm.
quarter and then a recovery. So that number is pretty solid. It looks like it's in the mid 20s, quarter over quarter growth. But look how it continues, right? So if Tesla can start producing quarter over quarter over quarter growth, that will get people kind of excited.
Mhm.
And particularly if that quarter over quarter growth accelerates, like you're seeing there in late 26, early 27.
Yeah.
So just keep that in mind. Like we don't necessarily need to see year over year growth for people to get excited about what's happening at Tesla. Quarter over quarter changes may do it too.
Well, that's what happened to NVIDIA, right? It was quarter to
Yep.
quarter. They just every quarter they kept raising guidance,
Yeah.
and then they just kept blowing that guidance out, and then they kept showing continued, and so then people go, okay, this stock is worth it.
Yeah.
Keep raising it. Hmm.
Right. And you can see Tesla in the last couple of years has had one quarter up, one quarter down, one quarter up, one quarter down.
Hmm.
Right. So it's been a bit of a sideways chop. But you start to get quarter over quarter every single quarter, that's going to get Wall Street's attention. So I don't know if I can definitively say when the stock is going to start moving and, double and all that kind of stuff. I don't know. I can't get in the mind of the market. That's anybody's guess. My conclusion from looking at all this is the next 5 years have the potential to be absolutely phenomenal. When this party really gets started, I don't know. but it may not be that far away. We may just need to get this quarter behind us,
Mhm.
and maybe that's it. Or maybe it's a couple more quarters as we start to see how the Robotaxi deployment
Mhm.
rolls out.
But this shows me that by the fourth quarter of 2026, just like you showed in previous chart, that's when revenue, that's when margin, and now you're showing me that quarter over quarter income growth. By the fourth quarter of 26, you're seeing like people are expecting for the next year and quarters, it's just going to keep going up. And so that's when, you know, by then it's undeniable
Yeah.
if you hadn't already, you know, but it's also true that, yeah, like if it's also true that once people realize it's a business and then they start, mapping it out themselves, they start, you know what they'll do, Cern? They're going to go back to your videos, your spreadsheets and go, oh gosh, this guy was actually right. And then they'll go, how did he calculate it? And then, you know what I mean? That's when reality hits and it goes, this is real. All the things you've been saying. So,
Yeah. Well, I'd like to think that. I doubt that they'll do that, but yeah. To me, it's not so difficult to see what might be coming. Of course, it's a little fuzzy in terms of the exact numbers. We don't know what Tesla's production is going to be 3 years from now for sure, right?
mhm.
We're making what we think are reasonable assumptions. We know there's going to be some hiccups or two along the way. That's to be expected. So the numbers may not be as smooth as what we see here, but I think the trend will be undeniable. Now, if we look at the next page, this is just the Tesla stock chart since 2015, the last 10 years.
Mhm.
When was the last time that the stock took a stair-step change?
Mhm.
Right? It was started in mid 2019. What happened in early 2019?
Model 3 ramp up.
They started the Model Y, I
The
believe,
Model Y. Mhm.
in
Model Y.
March of 2019. In that
Mhm.
quarter, they lost $500 million
Mhm.
in
Mhm.
Q1 2019.
Mhm.
In Q2 2019, they lost $180 million. That was their last negative net loss, their last quarter where they lost money. So that kind of coincided with that drop that you're pointing to right there. And then people realized that Tesla was going to start printing money. And the stock started to move before it really happened, before they reported it, right? And then certainly really moved before the pandemic. Took a little pandemic pause like everything else did, right? And then continued to go. And that was a period of time where Tesla had quarter over quarter and a nice year over year earnings growth. So the move up was well supported by the fundamentals of the company.
This is funny, hey? Because this could be here's the Model Y, here's the Model 3. And then once the Model Y was introduced, you go, oh, it's actually a hit. People want this thing. People are buying it. And then the Model 3, yep, it's a hit. They didn't die. The company could have died. And then they didn't. And then that's why you saw this ridiculous 20x, right? 2x and then a 10x. The
Yeah.
same thing could happen here where you got Robotaxi, then you've got bots.
Yeah. And the nice thing about Robotaxi and bots is you don't have the production hell that they went through with the vehicle.
Yeah.
Because if you can just produce them, and of course they're really good at producing vehicles now, and put them on the road, the business model is a much more profitable business model than just selling a vehicle to somebody. So it's a
Mhm.
very different situation. So my guess is that we get maybe some of the silliness beyond this first quarter behind us.
Mhm.
And if we can get people, then Wall Street will certainly start thinking about 2026 mid-year.
Mhm.
And if they start looking at their models, I think they're going to get more excited about the growth that's coming for Tesla.
Yeah. This right here, which is where we're at today, could be right here.
Could be.
And then we got
Yeah.
the Robotaxi rollout is equivalent to the Model Y. And then depending on how that looks, and then the Robotaxi, and then it just, robots, and then it just keeps going. Maybe we'll see. Let's hope.
Yeah. It's always difficult, comparing the past with the future. Obviously, the future is going to look a little different. But my conclusion here is that, yes, it's an epic 2026.
Mm-hmm.
It is, in fact, pretty ridiculous for 27 and 28. And in 29, I would say it's now a steady compounding machine.
Compounding, um, inflection, right? Like exponential growth.
You're moving from a business model that requires you to convince somebody to buy a big ticket item that's heavily dependent upon what's going on in the economy to something that's now a service that everybody needs every day, no matter what's going on in the economy. And you're driving the price of that down, making it so attractive for people. People are going to ditch their second cars and eventually their first cars for a Robotaxi service. And then, of course, Optimus. On top of that is a game changer for humanity in terms of we now have a form of labor that can compete against us. We've never had that before. And the economics of that are kind of astounding. And as we've seen, even if these numbers are off, it doesn't matter. The overall numbers are still incredible. What I hope to do in the coming weeks is take assumptions from some other folks and run it through this model and see how different it might be.
Yeah. I think
Right.
one of the big assumptions was the revenue per car in Robotaxi. I think you had 50,000, could be lower. See what would happen.
Yeah. And of course, the timing of when Cybercab production is and how much they make and all that matters, for the valuation in the short term. I don't think it really will matter too much for the valuation by 2029.
And that's where I think you're conservative in the future years. Let's just go back to answering those questions that you said at the very beginning. So could Tesla grow its earnings by 1,000% over the next 5 years based on what Elon said? Actually, your analysis is like, why is it 1,000%? It could be 10,000%.
Yeah. And by the way, we didn't show this, but if you take out Robotaxi and Optimus, I get earnings growth of about 400 to 500%. So half of that.
Right. Even if you don't get those two.
Yeah.
So this is very sandbagging, like you said. Epic 26, ridiculous 27, 28. You answered that really, really well. And again, it shows up in revenue, it shows up in margin, it shows up in earnings, right? It's just crazy.
It becomes undeniable. Yeah.
And I think we figured out that it was undeniable by the fourth quarter 26. When will accelerate growth show up in quarterly results? This is the interesting thing that you just showed now, which is actually next quarter, following quarters coming up. That's like nobody was expecting that.
Well, that's a beautiful thing about having a terrible quarter is that it makes comparisons easier for the next one.
Yeah.
Right.
No, but it's the ones after that is now looking like it's going to be positive rather than negative.
Those look pretty good too. Yep.
Yeah. Of course, everything's based on macro and what's going to happen, but it's looking good. And then the PE ratio on earnings 5 years out. This is the psycho crazy one. So 125 today, but 5 years out, let's say if it goes under 50, but if you hit those earnings, it's equivalent. Hindsight, it's like the 125 today is actually a 1.
Yeah.
0.8.
And again, we have good evidence for that with NVIDIA. The same thing happened to them. Now, it was a 6-year period between when it went from 1 times earnings to where it is today. But for Tesla, it could be over 5 years.
I think that would be a good show. The next one, another show for you to do is you pick some companies, Amazon, Apple, NVIDIA, and then you show, when what their PE ratios were and what happened the next 5 years. And then just say, okay, what was the likelihood at that time that they were going to, this invention that they were doing was going to happen? What were people saying? And then it turned out to be true. And that's why you saw this. And so it turned out that their PE ratio was completely just too low. Yeah.
It's interesting because in hindsight, all these big successful companies were fundamentally undervalued back in history, back in time.
Yeah, it's right. Also obviously picking and choosing. It's like, we're just going to pick the ones that are successful now. Let's go look. I get that.
Right, but and that's the risk. Yeah,
that's the risk. But that was back to my comment earlier, though. You've got a Mag 7 company, Tesla. You've got a $30 billion of cash in hand on just cash. You've got these existing businesses, and then every month that goes by, you are increasing the probability that these things are going to happen, and it's all probabilities, and so. Right. You can say, I don't think it's going to be 100%. Great. Bring it down to 10%, win and all that. And then there's still some growth. Yeah.
Yep.
In fact, didn't you do a show before where you said that even if you just did 10%, the growth is pretty significant already. Anyways, like you don't see the 100x, you see the 10x. It's like,
yeah. If you take 1/10 of our Optimus numbers and 1/10 of Robotaxi, it's still a pretty exciting future for Tesla,
10x.
even at those low numbers. Yeah.
Right. Because that's the scary part, is what you're showing here is 100x. If everything does go according to plan. So great show. Thank you, Cern, for doing all this work. You really, this one, outdid yourself. As I was saying in the beginning, you went and did it by month, by quarter. I looked at every single business out there. You compared it to what NVIDIA happened to NVIDIA. You really did show a lot of charts today, and almost all of it is brand new. So thank you for all that work, Cern.
You're very welcome. Yeah, I think that what I wanted to show was the potential for an AI compounder. We've never seen one before, except for NVIDIA is the first one.
Exactly.
And I think we're going to see more, and I think Tesla may become the second one.
And then, like you said, even Jensen Huang himself said, it's physical AI. That's the one. That's the AI compounder that's going to matter more. And if you look at his chart, it's like
that's right.
Way more important than everything else we're doing. So this is the largest markets, and Tesla's arguably the leader in these places. So good probabilities. Again, thank you so much, Cern. Follow him on his X account at Cern Basher. Subscribe to him. This is where you get the real forecast and real spreadsheets and real work. Thank you, sir. Bye, everybody.
Thanks, Herbert.
I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.